and welcome to my channel. My name is Ashley, and today we have Ms. Nicole Grogan Alston with us. She is a corporate tax strategist born and raised right here in Atlanta, Georgia. She is a mother of 4 and the owner of DNC Accounting Solutions, DNC Business Solutions, and DNC Academy of Entrepreneurship. And today we are going to be discussing how taxes relate to probate and estate planning. Now let's get into this. Okay, Nicole, can you explain to us how someone's taxes can be affected by an inheritance, whether that inheritance is big or small?
Yes. Typically, and it is a thing that's called inheritance tax. It's on the federal level and it's on the state level as well. But it depends on what state you're living in. They may not have an inheritance tax. Here in Georgia, we don't have an inheritance tax. The one thing about the inheritance is that generally the inheritance is not taxable. However, if it is some type of real estate, or if it's some type of retirement plan, or if it's some type of business interest, it may be collecting again some interest, some dividend, or generating some type of income. And at that time, that's when the inheritance tax will come into play. So typically, we have to make sure that if we are inheriting something, that we're not bringing some extra income or some extra additional amounts to that inheritance to avoid that inheritance tax.
What are some ways that, what do you mean by bringing additional income into the inheritance? How would that happen?
Okay, so typically, like we just talked about rental property. Say for instance, and I do this in my training with some of my tax professionals. Say for instance, a daughter inherits a rental property from her father. Okay, at the time of that inheritance, she get what is called a step-up basis, which means that the basis in that property is not the basis that the father purchased the property for. The basis of the property becomes the fair market value. So whatever the fair market value is of that property at that time, that's her basis in the property. Now, if she take that rental property and she continue to utilize it as a rental property, now she's going to be responsible for inheritance tax.
Okay, but if she sells it
now, if she sells it, that's a whole nother beast there, because now she may be entering into what we call capital gains. Yes, and then of course capital gains, we will have to pay taxes on that.
Okay, well, thank you for sharing that with us.
Subscribe to my channel to learn more about probate real estate, financial literacy, and generational wealth planning.